Shiv Prasad sir, shall we start?
Yes, sir, we can start.
Yes, sir. Yes, sir. Very good evening, participants. We welcome you to the 136th session of Learning Forum from Disciples India. Let me start with a quote. The beautiful thing about learning is that nobody can take it away from you, which is being told by B.B. King. So this is our whole motive of conducting a session and making sure it is being reached to the end user, that is to the final people. So we request all the participants to kindly mute. And it is a great pleasure for me to welcome you all for today's session. We are gathered here not just to learn, but to experience the true joy of knowledge sharing. At the Disciples India Learning Forum, we believe in fostering an environment where ideas can flourish and individuals can grow both personally and professionally. So once again, before we begin, I would like to remind everyone to kindly mute your phones and ensure you're in a quiet space. Remember, probably learning could be a challenging at first, and it becomes a nature with time goes on. So let me go with today's agenda. So we have two guest speakers who are there for today's session, and they will be just making sure that the knowledge has been reached to you people, and it would be a very happiest session. So what is this DIL forum, or what is this kind of Disciples India group? So we have a platform where we wanted to make sure that learning is not only for us. As I told you, learning wanted to meet with all different kind of individuals, different kind of young mindsets, and we have to share our own experiences to the different group of people, that would be professionals and as well as with organization. So this is why we came up with this kind of DIL forum, so which is going to host today's 136th session, and which is all going to be very successful. Until now, we can see that that amount of fire within students who are asking for, and it's not only about students, and everyone are loving our sessions. What the main objectives for this kind of session to be created is, so we wanted the personal and professional network to learners, so that the idea exchange would be very great. And that would be once again be helping for the different kind of development. So which would also be helpful for mainly into organizational development. And we wanted skill should not be limited. So let that be a contribution which can happen from our place. So which is from Disciple Fintech Group. So this is the team we are looking for. So for the year of 2024, we have a committee members. Our forum advisor is Dr. A.M. Suresh sir, and our president for DIL forum is N.K. Sundaram sir, and our vice president is Mr. Shiv Prasad sir, and the secretary is Dr. Praveen Gujjar, and joint secretary myself is Jayant. Assistant secretary is Mr. Akhilesh, and we have two student disciple coordinators, so who are working and making sure it is also being reached by them. One is Miss Yamuna, and one more is Miss Misbah. This is our team for the year 2024. So in 2022, we had conducted 24 sessions. In 2023, we had once again conducted 24 vibrant sessions. And in 2024, we will be completing that. And this would be once again a very special moment for us to go ahead with these kind of sessions. And once again, we are making sure that we are reaching to good number of people. And this is not only for 2 years. So successfully, it is being started from 2018. And even with all this COVID and all kind of diseases, we never stopped in. And we came up with those vibrant sessions, and we are continuing it. So you can just see the glimpse of what has been happened in this particular year. So this particular year, the session started with our president, that is Sundaram sir, which was 127th online learning session. And the topics were like soft skills, and it went on with cyber safety awareness. And we had all good people from organization and as well as companies, which was been helping for us to understand more and more. Say now it is a time to learn something more about financial services. So it is not just understanding what is there today. So we have to understand what is the futuristic approach. So let us also thank Akash Group of Institutions, that is Akash Global College of Management and Science, for also taking this opportunity and also just collaborating with the Disciples India team. So thank you, team, for making sure that you are collaborating with us. And once again, by taking all the suggestions from Suresh sir, we had an opportunity to conduct once again a very great session. So once again, thank you to you, sir. And now it's a time to learn our today's complete topic and to make more understandable. So let me now call upon Miss Reshmi, faculty, Akash Global College of Management and Sciences, to introduce our guest speakers for the day. You can go ahead, ma'am.
Okay, sir. Thank you, sir. Good evening to everyone. I hope you are all doing well today. On the behalf of Akash Global College and Management, the Department of Management and Commerce, it's my pleasure to welcome to the Discipline India Learning Forum and also our beloved chairman, chairperson, and vice chairman, and all the teams in management to the online guest lecture. We are thrilled to have a distinguished speaker with us who will be sharing their insight and expertise. Before joining, I want to take the moment to acknowledge the efforts each of you has made today. In this digital age, it is crucial to embrace the opportunities to learn from the leaders in financial advisory. Today, we have the privilege of hearing from the Mr. Satyan Sharma, Assistant Manager, Area Manager, Investment Product at Motilal Oswal Financial Services Limited. He has an extensive experience in industry in the area of finance and expertise. Today, he will be discussing about financial services in India's next decade. I welcome you, sir, to this section. As we engage in this virtual space, I encourage all of you to participate in the activity. Feel free to share your thoughts and queries during the question answer section also. A special thanks to Discipline India Learning Forum and also chairman, chairperson, vice chairman, and also the management team of Akash Group of Institution for making this possible. Without further delay, I invite you, sir. Next, I would like to invite Mr. Navneet UG CG, Executive Equity Advisory and BD Manager at Motilal Oswal Financial Services Limited. I welcome you, sir, once again. Once again, everyone, I will welcome everyone to this online section.
Okay, shall I share my screen, ma'am?
Yes, sir.
Sure, just a second.
Okay.
I guess, ma'am, somewhere they have to stop the sharing so that I can share my screen.
Yes, sir, we will stop, sir.
Okay.
Now you check, sir, it is possible.
Hold on, just a second.
Okay. Yes, sir, yes.
So, is my screen visible?
Yes, sir, it's visible.
So, good evening, everyone. So today I'll be taking you all through the micro and macro data of India. So, how it's going to impact our economy. So here, in this first slide, you can see as per the IMF projection data, you could see India's world's fastest growing economy, which is at 6.3. So when we compare with the other economy like China, USA, we are the first with the leading, with the GDP. So second comes Indonesia and third China. For the financial year of 23 and 23, we are leading. So during the financial year of 13 and 23, actually, if you see, China was leading with a CAGR of 5.9%. So let me talk about one more thing. If you see, which are the top five largest economy? If you see USA, China, Germany, Japan, and India, then later comes UK. So if you see USA, it has almost like 28.78 trillion, and India's GDP is almost 3.94 trillion. So when we see like about like USA stocks like Apple and Microsoft market cap, so the Apple market cap is which is almost of 3.51 trillion, and Microsoft market cap which is of 3.24 trillion. So which is more double than like our Indian like GDP. So like even if you see this data, like it is even predicting like we're at the right pace actually. So let me show you like the second page wherein like you can see the comparison of debt to GDP ratio. So if you see like in this chart wherein like India's like debt to GDP ratio is really less when we compare with the other peer companies. I mean like peer group of economies. So you can see like majorly China's debt to like GDP ratio which is almost more than like rest of the other nations. So let me take you through like the third slide, wherein you can see like the RBI's current, I mean like the current inflation rate is at now 5%. So the main RBI's target is to reduce till 4%. So right now, like for the financial year, like they're predicting to reduce the inflation rate to almost 4.5, then the second half to 4.4%. So you can see the chart over here, the red line over here. This is the RBI's prediction of inflation. The major thing, like you can see, like the central government spending on fiscal deficit to GDP ratio. So when we talk about the fiscal deficit, wherein like government is thinking to reduce this fiscal deficit. What do you mean by fiscal deficit? Wherein like if you see like government is spending more than what they earn, so that's what they are thinking to reduce this physical deficit. So every budget they'll be talking about like what's the physical deficit. So you can see for this financial year almost it's 5.6. So their main aim is to like reduce this physical deficit to 4.4. So then coming to the next part, wherein you can see the gross debt to equity ratio of a large listed I mean like the companies. So whenever like this debt to equity ratio is being reduced, so more in like you can see like large like FIIs, I mean DIs, they'll be focusing more on these companies because they won't be focused. They'll be seeing more on like these companies wherein debt to equity ratio is less. So, for example, when the Reliance said like we'll be reducing our like debt to equity ratio to 0, so you could see for the next day, I mean like the next day, like almost the Reliance stock really rallied up by almost 2 to 2.5%. So that's what you can see. The main aim is to like of all the companies is to reduce the debt to equity ratio. And coming to the sixth slide, wherein you can see almost the currency performance across all the major economies. So you can see like INR, like almost it's been stable when we compare with all the major economies. Even I mean like even you can see the rest of the nation they have been really volatile. So wherein I mean like our economy which has been like really stable. So even this will act as a like good for our nation.
Dogs baby.
So when you see about the forex reserve, the RBI's forex reserve is estimated to go up almost by 700 billion.
Sheep's baby.
So if you see during the financial year of 2005,
Into iదే problem.
okay, if you see during the financial year of 2005, wherein the RBI forex was almost 53 billion. And right now, if you see almost the forex is of 689. So now the RBI is expecting this forex to go up by almost 700 billion. So the next data, if you see, this is about the India's demographic data, wherein you can see like India will be adding almost 179 million people to its working age population. So if it is going to be added, you can see like there will be a lot of people they'll be earning. So their main aim is like they don't want to spend, like they'll be thinking more to like invest and saving their money. So like when they're going to the savings part and the investment part, So drastically, like even the performance, I mean, like it might increase, it will increase. So you can see like the India's demographic are in sweet spot. Like you can see India's like almost it's going to add 179, whereas like rest of the nation, which is really less. So when we talk about like about the like labor force participation rate, if you see, almost the female rate is almost growing. I mean, like this for this financial year, you can see here. And the same, I'm talking about the working age population. You can see it's almost the 25 to 64. It's going to increase. So which is almost a positive for the saving and as well as the investment. So, and if you see about this slide, you can see like, yeah, right now India's population, which is almost 1.4 billion. So in this, the working age population, which is almost 68%, you can see a non-working age population, which is almost about 32%. So in this working age population, almost you can see like unemployment is 4.4%, 4.1%. And in this working age population, almost in agriculture, majorly is 255 million, and the rest in trade and hotels, 99 million, and in construction, you can see it's 70 million. So, and in services, it's almost 67 million, and manufacturing 65, and in mining and electricity, it's 5 million. You can see here in this chart. So coming to this slide, you can see like there are like individual, like there are like you can see individual income declared through tax filing have increased by like almost you can see by 25%. So you can see in this chart, so almost 25.2% as per the GDP. Then you can see the total tax files growth almost there is a growth in total tax filer has been 4.4 CAGR in last 5 years to 80 million, of which only 30 million individuals actually pay the income tax. You can see this data which has been increasing, I mean like year on year basis. Then coming on to the return on equity part of all the listed company, you can see like there was a drastic fall from financial year 10 to till 2020. Then later on 2022, I mean 2020 till 2025, there is a drastic increase. So, and even if you see the profitability of any company, there is a drastic increase. So even the corporate profit earning has been increased. You can see as per this chart. So, in this slide, you can see like earlier during the 2017 data, you can see like earlier the iPhone production in India has gone up mainly like from earlier 2017, it was really less by less than 1%. And now it has gone up to 10% in the year 2023. So, and now they're planning to scale up more than up to 25%. And even if you see, the government is planning for like PLI scheme. So what do you mean by PLI scheme? So it's a production linked incentive scheme. So government they'll set a certain target to certain industry. If you achieve a certain manufacturing capacity, I mean like manufacturing of this much of product in a day, so you'll be given a this much of incentive. So by this by this I mean like the certain industry they'll be focusing on that certain target so that they could achieve the target which are given by the I mean like the government. So you can see in this in the second chart you can see India's electronic export. So mainly you can see electronic export actually the trend from India is rising rapidly. So which is like growing which is actually growing, I mean year on year basis. So, but if you see, even the electronic imports are still much more double of electronic export which we do. So it's even indicating like even we have more potential for like even we can source all this electronic product instead of like importing these electronic systems and all. So if you see, this is the government's outlay under PLI scheme and semiconductor promotion scheme. So the majorly the government has initiated mainly to the semiconductor and display, which is of 28%. So the total government incentive which is given is of 2.7 trillion. So mainly to promote manufacturing in sector where India is lagging. So the government is providing production linked incentive. across all the 14 sector, you can see with worth 2 trillion and additional 0.7 trillion to boost semiconductor and display manufacturing ecosystem. So you can see the trend in retail digital payments in India. So wherein back those days, to buy any vegetables, we used to transact using using cash. But right now, thanks to UPI, wherein even for 5 rupees also we'll be using UPI. So you can see from 17 till 2025, 2024, how the UPI, unified payment interface has been increasing year on year basis. You can see even growth in quick commerce is also increasing. For example, even from financial 23 also, you can see the graph how there is an increase 7x. There was a growth. There is an increase. And the number of companies, if you see, which is more than 1 billion US dollar, which is of almost more than 500. So even the market cap of all the companies which are being increasing. So when you see about the India versus China, getting MSCI. So what do you mean by MSCI? It's a research firm. The meaning of MSCI is Morgan Stanley Capital International. So it's a research firm wherein they'll be adding a list of all the nations companies in their watch list. So you can see as per this graph, India's company which have been they have been added more than China's. So wherein China's list of company are been decreased. You can see here. So in this chart you can see India's household in equity segment, how it has been diversified. Wherein mainly suppose in a household they are earning for example 100 rupees, wherein they are spending 51.3 rupees in property, whereas in gold 15.2, and in bank deposit almost 13.3. And if you see in insurance fund almost 5.7, and in pension fund 5.7, and in cash 5, and in equity you can see it's hardly less 5.8. So even if you see if you see in the past from March 13 till now, there is a drastic increase. You can see during the year of March 13, it is almost 2.2, and now it has gone to 5.8, which is almost 2.6x actually over the last 10 years. So if you see let me talk about gold actually. There is an interesting fact actually when we see during back those days to buy a gold, our grandparents they used to go in a cycle and they used to buy gold to a shop, but his shop was really small. When my father he used to buy a gold, he used to go in a bike and he used to buy a gold, and then the number of shops it got increased. And back now if you see the gold, the gold shop even over pan over the pan India they have opened the shop. So what I'm telling is for example, if you see Titan, they have all over the all over the India the shop means the equity part is increasing over there. So if you see in this chart, so you can see almost US equity US household investing in equity is 22.1, whereas India is almost 5.8%. And whereas China almost 5.2, and Japan you can see is almost 17.6. And coming to the major shift coming in India's income pyramid, you can see here. This is the income pyramid of 1 lakh and 1 lakh and 3 lakh 50 of US dollar, 5,000 and 1 lakh. So this is you can see over the next 2031 there will be a drastic increase for this set of for this set of income class group, 1 lakh to 3 lakh 50. So you can see India's large middle income group actually. You can see 371.7 million, and China comes second, and the rest Indonesia, South Korea, Thailand, and Taiwan and Malaysia. So when we see about the let me talk about one of our product called IAP. So one second, I'll share a screen wherein how our Indian market has performed over the financial year of 2000 till 2024. Let me share the screen, one second, of the Excel sheet. One second. So this is the data of the rolling return. You can see in the financial year from 2000 till 2009, I've taken the return from 2001 to 2010. So if you are stayed invested for the long term, you can see how the market has been performing over the 5 years, 3 years. This is the return which I have made. You can see from 2000 to 2009. No, in 10 years span, not even a single time Nifty has given a negative return. You can see this data, and for the 5 years also, you can see from 2000 to 2004. No, I mean 5 years of span, the rolling return. So not even a single time the Nifty gave a negative return. You can see this data, wherein the 3 years there was a negative return. You can see from 2000 to 2002, there was a dot-com bubble burst. So majorly because of this reason there was a negative return. Whereas then when we compare with the rest of the year, not even a single time, I mean, the Nifty has given a negative return. So even for the 1 year period, you can see there is a negative return. So what I'm telling is if you are stayed invested for more than 1 year, 3 years, so you could see there could be a chance you could make good return actually. So even small cap, I have prepared a return wherein you can see how the small cap index has performed for the 10 years and 5 years. So I'll show you one more data wherein the Nifty's performance of monthly average performance, you can see. So month on month performance from 1999 till 2024. So you could see how the how each month, I mean the Jan month has been performing. So you could see in the month of Jan, it has given a negative return, wherein December was the only month from 1999 till 2024 the Nifty has performed really well. You can see almost it has given a return of positive return of 3.52%. Then of this also I made a quarterly basis. I mean the return average return of Nifty, wherein you can see the Q3. I mean September, October. I mean October, November, December. So this quarter, I mean the coming quarter, it's going to be it's going to perform really well. You could see 1.87, wherein Jan, Feb, March, wherein you could see the Nifty's average return is almost 0.28%. So if you are thinking to invest during the month of Jan, Feb, March, it's actually even this span is also good actually. See the quarter 4. So and let me share about one of our product. So actually, this is one of our product called IAP. So Intelligent Advisory Portfolio. So wherein it has been completely pre-packaged equity portfolio, wherein you don't have to do anything. For say to whom to be pitched for IAP, if you ask me, the people who are new to the market and they don't have anything, I mean they don't have the knowledge about where to invest, where to buy. So for them, this is the right product. So I tell you, in this IAP, there are registered investment advisor. They completely take care of this portfolio, wherein you don't have to do anything. So if you see in this IAP, there are range of products suitable for the customer profile. So in this, if you see 100%, they are being taken care of by RIS. So 24/7 you can see what the the RIS are doing. In real time you can see even the clients can see what they are doing. So let me tell you so if you're new to the market, like I'll tell you one example. So if I'm new to the swimming, for example cyclist, I need to participate for a national level cyclist. So I don't know how to cycle. So there are set of 2 person I need to learn. For example, there is a national level coach who has learned cycling, and there is a person who's been cycling from one town to another town. So it would be better that I learn from a cyclist who has years of experience. The same way with the IAP, like you have to hand it over to the person who has a decades of experience. So that's what we have. Like if you see right now, the RIS, Narmonina, Abacus, Renaissance, and Vivekam. So these are some of the RIS which we have. So for example, if you see Alpha Blue Chip, which is being taken care of by Renaissance Smart Tech Private Limited. So if you see this fund manager, his name is like Pankaj Murarka. So almost, if you see, he has a decades of experience in this industry. So wherein almost he was one of the key members to set up like Axis Mutual Fund. Then later on, he started his own fund, Renaissance. In this Renaissance, there is a fund called Alpha Blue Chip. So in this Alpha Blue Chip, the main aim of the fund manager is to pick up the stocks which are like fundamentally strong. For example, he'll be using the quality growth, the competitive edge, and reasonable pricing, and bottom up stock price, the bottom up stock picking. So he'll be using mainly based on these criteria. So if you see the minimum investment for this product is almost 250,000. And if you see talking about the another product which we have is Abacus. So Abacus Smart Flexi Cap. So if you see Abacus Smart Flexi Cap, wherein it has been taken care by Sunil Singhania. So if you see Sunil Singhania, almost he was handling Reliance, Nippon Life India Asset Management. So earlier it was Reliance Nippon. So he used to handle that fund. Now he has started his own fund. Own RIA, like Abacus Asset LLP. So if you see he actually caters a large PMS client, wherein 50 lakh 1 crore he'll be handling those kind of portfolio. So to cater for the retail clients, so he has started his fund in IAP, which starts from 5 lakhs, so that even the retail clients can start doing. So one more thing, if you see, when you go to the Google website and search for in SEBI, in SEBI portal and search for the PMS of Sunil Singhania's. Only you can see Sunil Singhania's portfolio has given a well written when we compare with the other PMS portfolio, and these are the main USP of the Abacus portfolio. If you see, the main thing which the Sunil Singhania he uses is mid strategy. So the quality management, earnings, events, time, and structure. So management in the sense quality management. So for example, quality management. So Infosys, Reliance, these are one of few of the quality management stocks. So earnings, quality earnings. For example, you could see even Reliance, the earnings which they post every quarter and quarter basis. So which is really good, and even the events and trend. For example, there is a hype created in the market, wherein every fund manager knows because of this event, this stock or this sector might impact really well. So they'll be choosing those kind of stocks in this portfolio. For example, even if you see timing, so they'll be choosing the stock at the right time, and they'll be exiting at the right time. If you see the structure, if you see the size of opportunity, so the consistent growth in the profit, mainly there should be a consistent growth. I mean, year on basis, like the profit should be increasing year on year basis. So thank you. Later on, 1 second, we could take the Q&A. I'll be sharing the screen of Satyam's. Hold on. Satyam?
Yeah, Avni, just a minute. Just yeah, sorry, team. Was facing some network issues. So yeah, thank you, Navneet. You have already given a very good glimpse about market. So hi, team. This is Satyam, and I takes care of investment product here in Motilal Oswal. So today already Navneet have covered about market, but we will go a little short about market. Then we will have some basics of financial planning session, how by basic financial rule, how we can calculate how much investment we should do, what is our human life value, everything. So we'll go through with that slide as well. So Navneet, let's go forward with the slide. Hello. Hello.
Yes, Satyam, 1 second.
Yeah,
Yes, Satyam.
Yes. So today agenda we are going to cover about us like as a Motilal Oswal group, what we are doing. Then we will just go to go back to the slide, previous slide, Navneet. Previous slide. Then we will
Yes.
cover little about economy, macroeconomics. We will see it, what it is going on in the market as a market perspective. Then we will discuss about equity market. Then we will little bit discuss about portfolio insight, about equity, debt, and gold, because we should focus on all the asset classes, and then also Indian market update current. Then I will little bit cover about the mutual fund investment, because for a early investor, when they want to invest in market, like if they are fearing that, okay, they have feared that, okay, if they will invest in market, their money is going to be drawn. So for that kind of investor, starting way of investing might be the mutual fund way, there where they have the very less risk. So that also I will cover in latter part. So go forward with the slide. Next slide, Navneet. So this is Motilal Oswal Group. We are into this business from 1987, almost 38 years kind of experience we are having in wealth management and broking industry. So we can see that we are presence having more than 450 plus cities with more than 2200 plus business locations. We are listed in market as well, BSE and NSE. We have our AUM more than 27,000 crore in investment product only. And as a group, Motilal Oswal Financial Services Limited as a group, we are into institutional equities, broking and distribution, investment banking, private equity, real estate. We are having our own PMS AIF mutual fund, offshore funds. We are also into wealth management. Then we are also running with our housing finance and commodity broking. So this is our short glimpse about the Motilal Oswal group. So now next slide. So we'll talk little bit about economy right now, macroeconomics part with related to equity market. So as we can see that we can see right side the CPI current price inflation and the repo rate and 10-year G-Sec. You can see the chart. You can see here that 10-year G-Sec yield that is constant. The repo rate that is now it is at 6.5%. The current CPI it is if you see from August 19 to May 24 that is almost now constant, like it is at around 3 4 level, I guess it is around 5 4.5 4.8 level. And if you see the GST collections, if you see overall right now, it is now like totally increased. So why I'm talking about these all things, I will come on later part, because these all things are actually boosting the market. So if you see the fiscal deficit, current fiscal deficit, so financial minister, our own finance minister Nirmala Sitharaman wants to bring India's fiscal deficit below 4.5% of GDP by financial year 2026. Also, she have set a target of 4.9 for 9% for financial year 25, and currently it is at 5.1%. So she wants to get it down lower to 4.9%. Also, the cumulative fiscal deficit is currently it is running at $1.36 trillion, representing like overall 8.1% of the full year fiscal deficit target. If we talk particularly about the rate cut of the repo rate, so obviously we have seen one rate cut of America recently. In US we have seen there is a 50 basis point rate cut has happened. So Fed chairman Jerome Powell he indicated that USA is progressing towards its 2% inflation target. So overall, he has suggested that rate cut might be on the horizon part, but recently one Fed has cut has already been happened. In soon later stage, it will come more down further. So overall GST collection, if you see in gross, it is like 1.74 lakh crore. If you see the yearly jump, if you compare with last year, it is almost 10%. Next slide, Navneet. So coming to equity market snapshot. Currently, what is the running? Obviously, Navneet has covered everything, but yeah, we will go a little bit about equity market. So equity market already at all-time high. It is running with almost 25K. It is 25K 700 level. And if you see month-on-month percentage-wise, Nifty performance, you can see that in August 23, it was minus 22.5. And again in December 2.3, we were at 7.9%. And again in May, we have seen there is a decline, but from there onwards, we are seeing that market is going up only. Nifty is going up only. If we compare month-on-month wise return, also year-on-year percentage, also if you see the Sensex is 27% level, Nifty is 31.1% level. We are comparing with other global market, then Dow Jones is there, Nasdaq is there, Hang Seng is there. Then you can see Hang Seng market, Chinese market, they are down by 1.6%. Indian market, so that what we can imagine from here is that Indian equity market is in very good shape. Why it is in very good shape? So the economics, macroeconomics, and the government initiative, what they are taking it, what the current GDP, what we are seeing it in market. Going forward also, what are the ways governments are taking it, the initiatives government has taken it. So that is supporting market overall. So if you see previously, what are other factors? The main important factor is DII and FII activities. What is DII? Is domestic investors, and FII is foreign investors. So domestic investors, if you see, FIIs were mostly like they are like, if you see, mostly they are not selling in the secondary market in August 24. Q&A we will cover last. Definitely we will cover Q&A, everything we will cover in last. So let me complete this. Definitely whatever question will be there, we will cover in last. So DI, and if we see the domestic investors right now, they are pumping out the money very much. They're pumping in the money very much. If FIIs pulling out money also, our market is not going that much drastically down, because domestic investors supporting market, retail investors are supporting market. So if you see, the FIIs were not selling the secondary market, in August 24, having sold over 21,000 crore, while DIA inflows remained strong at over 48,000 crore. So if like suppose FII is pulling out the money also, DIA is pumping the money. So that is keeping market stable. Go to next slide. Noni. Yeah. So major economy, if we see in August, this is all August data. So if we see like the key global markets like Taiwan, it was 19% up. US, it was 18% up. India, it was 15% up. Whereas these all the top three economies, where if you see the Russia, Brazil, China, these all are negative. They are the worst performer in equity market in USD terms of current year. Current year till date means from January 1st till date. So talking about Nifty's valuation part, then Nifty 50 is trading out at 3.1 level. This is August data. It is almost like 1 year trailing earnings. If you see the P of this Nifty, so valuation part, it is discount of 5% in 10 years average. If you are pulling out 10 years data, there is discount of 5% only. And if you see the PB ratio of Nifty above historical average is almost 3.7x. So you can see a premium of 14%. It's total 10 years average if you are taking out the average part. Our view on equity market is like Nifty 50 has delivered stellar returns overall, 17% CAGR. If you see overall our historical return of Nifty 50, 17% CAGR they have delivered it. If we support equally, like if we compare with corporate earnings also, that is earning CAGR of 18%. So we expect again like earnings momentum, it will be sustained throughout this year as well, and the growth will be moderate in financial from, if you compare from 24 to 26, it will be moderate to 15%. And if we are like remain constructive on the market side, and our preference predominantly in favor of large cap, because the mid cap and small cap valuation is little high current time. So we are very bullish on PSU banks, consumptions, industrials, and real estate. While we are also becoming more optimistic about the next slide. Just go to next slide down here. Yeah, optimistic about capex spending and strong flows. Also the economic growth. So these are the two factors. Equity market is currently remain positive because on these 3-4 factors. There likely one is economic growth. Second one is capex spending and strong flows. And large caps currently it has remained fairly valued, but like well just like discussed about mid and small cap, that is an higher valuations, but still potentials are there in mid and small, that there's small correction will be there, but still lots of potential in mid and small cap segment. So another thing that is good for the economy is that rate cuts will be there going forward. Repo rate will be come down, obviously. And also the global events which are coming like US elections. So there will be short-term volatility, but definitely long-term market is going to be good only. Go to next slide, Anoni. Coming to debt market, volatility are like, if you see the last 1-2 years of debt market, we are seeing that the bonds yielding highly because the repo rate is high. So the bonds, whatever currently yielding is a higher side. Coupon rate is higher side, yielding is higher side. So suppose someone, we will discuss in last that how much debt investment you should have in your kitty according to your age wise, according to your risk profile and this all. So if you see the current rate of interest of debt funds, these all are very positive side. We are going to see the rate cuts in future, obviously going forward in another 12 months time frame. So obviously whatever the current coupon rate we are getting in bonds and fixed deposit, that is our very high stage, we can lock the current rate of interest while like we are going to subscribe for it. So overall, if you see just a minute, if you see the same thing for gold also, it is like medium term. If we say the short term, medium term, it is like remains positive. As central bank have also accumulated gold, like given central bank I have like for accumulation of gold, and also there is a robust demand for also for this one gold. So that is also one of the thing. So go to next slide. So in short, we can take that In August, all indices were closely relatively flat, but still delivered positive returns. The sectors which have delivered good returns is healthcare, IT. They have delivered very good return because the real estate was the worst performing sector in August 2024. And if you see the strategies, particularly the strategies, so momentum and low volatility strategies have delivered positive returns. So like momentum, I will discuss about momentum. What is momentum? Momentum is nothing but suppose the current trend, what it is going on. Suppose if you are searching anything on Google, latest movie collection of any Bollywood superstar, latest like trending places in Bangalore, trending places in suppose in Vijayanagar, trending places in in Hebbal, like whatever places, trending places you are searching it. That is so what Google will fetch the result, right? What is the trending thing will be there in Google, they will fetch that one. They will show that one. So same way here in momentum, what happens? What are the trending things that is going on? So for momentum based investment, whom they are doing it, suppose what are the trends going on? Suppose right now which sectors are performing, which stocks are performing, going to perform good. So that kind of investment like strategies is giving positive returns, whereas if you are going for the value and quality right now in current market scenario, they are comparatively delivering negative returns. Okay, but in longer run, obviously value and quality will give good returns. If you see the market trend of Nifty, so that will deliver positive returns. So normally Nifty 500, if you see overall, that is primarily driven by the IT companies, healthcare and financial services sector. And subsay, like if you compare the least one, which has delivered the contributed least, that is industrials. Go to next slide, Noni. So this is the return contribution by sector. Nifty 500 index. This is August data. So if we can see that IT have contributed more, healthcare have contributed almost similar, financial services almost similar. The least one which has compared that, given that commodities, utilities, services, industrials, and services, and diversified is mid-even, break-even point. Go to next slide. So this is the Indian market update. If we see the changes in 1 month, 3 months, 6 months, 1 year return change percentage, it is like you can see Nifty next week, it is almost running at for 69% level. Very good return. If you see compare with Nifty 50 is the least one. Apart from that, if you see last 1 year return, market has delivered also very good return. So the sector which has performed really well in this last 1 year is like energy sector, delivered around 70% kind of return. Last 1 month, energy have performed least. Real estate has performed least, but last 1 year return, if you see, the real estate has also performed very well. And auto ancillaries booming. We can see the EVs are coming up. So many government are promoting PLI schemes, they are like providing incentives to the companies, Make in India, China Plus One. That kind of strategies are boosting this manufacturing sector and infrastructure and auto sector. So that's why we can see there is a boom in these all sectors. So momentum we had discussed already. If you see the fixed income side also, 5-year benchmark GSEC was yielding around 8.8. Now it is running around 6.7% because already we are going to see the rate cuts. So already our GSEC now it is almost now it is at 6.7 level. Go to next slide, Navneet. So the economic indicators, you can see the inflation as of 31st July, it is 3.54%. 6 month was 5.110. You can see the comparison chart over repo rate. It is stagnant from last 6 months, 6.50%. We are able to see it. GST collection is at high. Last 1 month, we can see, if you can see, compare almost, it is like almost every month we are saying higher GST collection that is happening. Unemployment percentage as of now it is 8.2%. If you compare with global market, CPI United, if you see the United States, you can see there is a decline there in inflation. So obviously that is booster for market. Go to next slide, Noni. So overall, if you see about this all that, so inflation economic part, then we can see that um, like normally what RBI is, what they are doing it for inflation part, controlling the inflation, they are doing plus to minus. So the retail inflation, their target is right now to have a 4% target, like in nearly 5 years, like we have not seen that much, but we are going to see that. While also we have already discussed that US inflation is also going to be in control. Uh, Overall, we can see like domestic investors are not sellers, primarily in the debt segment. Uh, but equity segment, we can see that there are a lot of inflows by domestic investors. If you see the US unemployment is 4.3%, like we can see that is the highest one in nearly 3 years. But that's caused a little bit of slowdown in hiring and notable increase in temporary layoffs. You can see in IT and this all where mostly like IT companies were seeing the layoffs because of this unemployment and this in last 3 years. Go to next slide, Navneet. So I will discuss about like the investment part. Like we have discussed more about market and everything, but how we can participate in market. There is a lot of one of the ways our fellow colleagues Navneet have discussed about IAP, intelligent advisory portfolios. Like good portfolio, if like you don't want to take risk from your own, you have some amount like to 1 lakh. From 1 lakh it is starting. You have some amount you can invest into market. You will get a decent return. You have very good fund managers are there. Return wise good. Suppose you don't have 1 lakh also. You want to just start in the investment cycle in equity. There is a way called mutual fund. So mutual fund is nothing but directly you are not investing in equity. You are investing through pool investment. Mutual fund is nothing but a pool investment. Suppose I am one of the one of the investor. Navneet is one of the investor. Like this, what fund manager will do, AMC will do, they will accumulate the money from different thousand investors, and they will pump that money into different stocks, not in one stock. So the risk diversification will be there. So directly investing in stocks, what will fetch that? You are suppose stocks value will come down automatically. If you are investing in one stock, automatically your portfolio values is coming down. But if you are investing in 20-30 different stocks, obviously suppose 5 stocks are going down, 1 stocks will go up. So that is the kind of investment where you can go with a mutual fund way, where the risk diversification is very less. Because suppose I can give an example. Suppose a retail investor is there. The highest one right now, it is currently the MRF stock I can talk about. The level is around 1.35 lakh. One stock price is 1.35 lakh. Suppose we're just starting in market, who can't go and buy MRF share of 10 shares? But a fund manager can do. How he can do? He can buy 10 share of MRF, 1,000 share of MRF, because he is collecting money from 10 different investors, 1,000 different investors. So that is one way. So mutual fund, if you see why you should look upon in mutual fund, if you see right now what I talked about, DII, domestic investors. So if you see the mutual fund flows, total MF AUM increased 6x in past 10 years. 6x in past 10 years means from 10.1 lakh crore to 66. Now it is almost 68 lakh crore. It is the 31st August data. Now in September, it has reached 68 lakh crore. If you see the SIP contribution, it is a record high of 23,547 crore. And comparative, if you see the equity and debt mutual fund, so equity have a positive net flows of 38,000 crore, and debt have still people still many rarely 6% of people invest in market. And in that also we can see like equity investment will be less. People prefer debt investment. They don't want to take a risk. But in mutual fund, if you have some time, 4 years, 5 years, 3 years kind of time frame, obviously your money is not going to be in loss. Your money is going to be profitable. Your money will be compounded. So go to next slide, Navneet. This is net flows. If you compare the data wise, so equity mutual fund, you can see every month it is in June, it was the highest one, 40 crore, 40,000 crore. It has been inflows in June. If you see the debt mutual fund, in June, debt mutual fund, it was the least one because people have not pumped the money in debt. They have taken out money from debt and they have started pumping that money into equity. So equity MF inflows turn positive by 3% month on month. Every month, 3% positive inflows we are seeing in mutual fund. So mostly if you see in August, in July, like in August, sectorial and thematic. Sectorial is nothing but suppose in mutual fund there is a categories: large cap, mid cap, small cap, flexi cap. So I will little bit I will put light on large cap and mid cap and small cap. Large cap is nothing but top 100 companies, fund managers investing the amount. Mid cap is nothing but 101 to 250 companies, fund manager will invest the amount. Small cap is 250 and above companies. So comparative to all, large cap is little less riskier, less return than mid cap. Mid cap is little less riskier than a small cap, but higher return than large cap and less return than a small cap. Small cap is little less riskier, but higher return. So higher the risk, higher the return. That works out in equity market. So if we and sectorial and thematic fund is nothing but particular. In large cap, what happened? Top 100 companies, if you are investing in that top 100 companies, so many sectors are there. Not it is not ki only IT is there or banking is there or manufacturing is there. Lot of 10, 15, 20 different sectors are there. But in sectorial thematic, what will happen? Suppose I want to invest in only financial services company. So we will choose sectorial funds, thematic funds. Okay, so that is called a sectoral thematic. So we have seen a highest inflows in this fund, 18,117 crore in July. Highest outflows is ELSS fund. ELSS fund is nothing but people are investing in ELSS fund for tax saving purpose, Section 80C. So outflows we have seen maximum in ELSS fund. So there is the lock-in period, 3 years of lock-in period in ELSS. But as this 3 years will over, they can take out the money. So that is there. Go to next slide, Navneet. So the sectorial trend, if you see overall, mostly sector-wise month-on-month change in value percentage. If you see right side chart 2, retailing is the highest one, and the least one is aerospace and defense. Okay. This is month-on-month data as of for August 2024, 31st August 2024. There is a correction in defense sector right now, but obviously going forward, long run, defense will perform. The valuation is still at a cheaper price now. It is a good time to enter into defense sector because we have seen a massive correction in defense, but still there's a lot of potential in defense. And then capital market, obviously, it is performing very good. Automobiles, pharmaceuticals, IT, insurance, telecom services, consumer durables. So all the companies are performing very good. And the least one is the aerospace, defense, then industrial product, auto components. If you see the sector-wise month-to-month change in allocation percentage, that was the value percentage. That but change in allocation percentage, if you see, banks, August 24, it was slighter higher size. IT almost neck to neck. Almost all change percentage very minimal. Almost there are neck to neck percentage. And top sectors where MF like mutual fund managers have increased their allocation. There it is in retail, IT, software, and pharma and biotechnology. Go to next slide, Navneet. So 1 second, I will share you the screen. You can stop it, Navneet. I will ask you again to share you. So just stop it. I will have to share something more. 1 second. I have raised hand. Please give me sharing right for that. I have raised hand. Host, please give me the sharing right. I'm not able to share the screen. Host, could you please give me the sharing right? I'm not able to share the screen.
They are giving, sir. They are giving.
1 second, sir.
So till the time he is giving, so I will come on to mutual fund investment. So mutual fund investment start with rupees 500 also. So you can start with 500 SIP as well. So it's my suggestion to you all that if you are not investing in market, please do invest, because whatever right now we are seeing our Indian market. I will just give you one more data point. During 1950 till 1990, we have seen a biggest bull run, 40 years bull run of Japanese market. Okay, that was the maximum kind of maximum year of bull run any country have given. That bull run was from 1950 to 1990. US market have bull run from 1970 to 2000. Chinese market 1990 to 2005. Same from 2022 to 2047, we can say. This is a Amrit Kal. Amrit Kal is a political term given by our Prime Minister, but for stock market, I'm using this word Amrit Kal, means this 25 years of Indian equity market is going for a Amrit Kal for the investor who is investing in stock market, equity stock market in India. So one of our fund manager only, recently I was having a session with fund manager, Mr. Atul Suri. He is the founder of Marathon Trends, PMS and IAPs. So he's having veteran in markets, 32 years of experience in market. Started his career with Parag Parekh. He's renowned name in market. He might be someone who is seeing CNBC and this all. He comes in CNBC. Might be have heard also. But what he was saying that he worked with Rakesh Jhunjhunwala for 15 years as a trader, 17 years with him. And overall experience is almost 32 years. What he was saying that currently what the GDP rate percentage, what we are saying it, if we are going with current rate also, the Nifty will touch 13 lakh by 2047. That kind of potential is telling by thumping his hand in the table. That kind of potential there in the Indian equity market. So please do invest. Suppose we have not ever invested earlier, you can go with SIP method. It is a very good tool for as early you will invest, the compounding will happen very fast. There is always a cost of delay. So please do invest in SIP, any of the platform, please, but do invest, because SIP is a very good tool. Suppose you don't have time, you don't want to look markets every day, you just put SIP monthly or lump sum, whatever ways you are feasible with.
So you can share your screen now.
Schemes we will discuss in detail. Okay, in schemes individually we can discuss. So we will help you on the scheme part, definitely.
Sure, sir. And so now you can share the screen, sir. I enabled the share screen option.
Yes, got those. So just basic rules of personal finance, like how you can decide like how much investment you should look upon. So this is basic. So it will be easy to understand you how much allocation you should do. I will just take 7-8 kind of rules in personal finance. Just a minute. So the first step towards any financial security is to taking control of your finances. That is right, because money management is an art actually. So where from like how you can track your investment, how you should do your investment, how much in savings, how much in finance, how much in equity, how much in debt, how much in gold, how much for emergency fund. All these things you will get to know from the basics, like for following it. I will tell you some rules how you can get this one. So this is the basic rule. I will discuss about 10 basic rules. So first one is rule of 72. So the rule of 72 is nothing but in how much time you want you want to double your money. Okay. So suppose formula is just divide 72 like interest rate. Suppose interest rate you are expecting ki my interest rate, I am assuming that my interest rate is 6%. Suppose you are assuming 6% interest rate if you are earning, in how much time your money will be double? It you just have to divide by 72. So it is 12 years. Very basic rule, simple rule to calculate your how to double your money. Rule of 72. So same example it is there. My fixed deposit giving an interest of 5% per annum. So how long it will take my money to double? So we have just divide by 5. It is taking 14.5 years to double your money. Suppose you are investing 1 crore in fixed deposit 5% annum per annum interest rate. So your money will be double in 14.4 years to come. Rule of 70. Rule of 70 is like your predicting your money, whatever money you have invested, future money. What is the buying power for your money right now? What will be the future value for that money? So if you can, like this is the example we have given 5%, 6%, 7%, 8%, 10% inflation. If we are taking it, your money to take reduce like same. We have done like whatever inflation percentage we have taken, we are dividing by 70. So your money to reduce the value means suppose your money value is currently at 1 crore. So in 14 years, your money of 1 crore value will be just like 50 lakh, because that time your money value will be only 50 lakh after 14 years. We have taken just 5% inflation if we are taking it conservative. So this is also one kind of rule where we can calculate the money value, future money value. Same thing it is worth of 1 lakh in future, it is showing that it is just 7,887. Means in 30 years, the value will be just 7,800. See. So that's why equity investment is the one thing where your money will be beating your investment will beating the inflation. So which investment you should look upon right now? That the investment which beats the inflation rate, that is the ideal investment. So one mutual fund is one of the ideal investment for the basic investor, startup investor. Another is like 80 minus age rule, means it is asset allocation rule. In asset also we have lots of asset, real estate, gold, debt, equity. So insurance and this all. So suppose I'm 20 years of age. What will be my weighting of equity? So it is like 60%. So it is like currently 20% is my 20 is the current age. So 80 minus 20 means 60% should be in my equities. I can take higher risk because my age is less, and 20% in other portfolio. Okay. Same if we calculate for 40 years person, 40% will be the equity, 40% should be in the bond. So bond is nothing but savings plan, insurance plan, endowment plan, debt product, FDs, and this all, debt investment. 4% rule for financial freedom. This is nothing but suppose how much percent you should allocate for your future expenses and this all. So suppose corpus required is like 25 times of your estimated annual expenses. Suppose your annual expenses after 50 years of age is 5 lakh. Okay. And you want to take voluntary retirement, then the corporate you require that time should be 25 into 5 lakh, 1.25 CR. That time you should have that corpus. Same thing, suppose if you have taken this 1.25 CR, you put 50% in equity and 50% into debt. So 1.25 CR divided by 2, 62,50,000 into debt, 62,50,000 into debt, equity debt. Withdraw 4% every year means 5 lakh every year you can withdraw it. So this rule is working 96%, work for 96% of time in 30 years period. This is tried and tested model. Okay. 10-5-3 rule. Another basic mantra of financial planning is this 10-5-3 rule. This rule simply tells you like how much you should allocate into different asset classes and how much kind of return you are expecting it. So one second. So suppose like savings you want to allocate 3%, 5% you want to allocate in debt, 10% you want to allocate in equity. Depending on the age factor and the risk profile, you can allocate into different asset baskets. It is not mandatory that 10%. If suppose someone is 60 years of age, who don't want any risk and this also they can't put in equity, right? So same thing, if depending on age profile and this all, they can put their investment. This is very important. Everybody should focus on this 6x emergency rule. This is like emergency fund, refers to money which is like we use for our tough times. Okay, so this gives our financial security in the emergency time. So we should keep this one. So how this works? How suppose how we have to calculate that? Like suppose if we build like suppose you are earning 50,000 monthly, take home income is there right now. Okay. Step 2, what will be there? 6x of that amount you should save. Means if you calculate yearly, 6 amount means 50,000 means 6x is nothing but 6 months you calculate 50 lakh into 6 months you calculate is 3 lakh. So suppose you're earning 60 lakh, lakh, you should at least save at least 3 lakh for your emergency thing. That is 6x emergency rule. Whatever earning you are having, you just have to divide you have just to multiply into 6. That kind of purpose you should have as an emergency fund. This is also very important right now in young age people. What happens, like they are mostly into the EMI thing, that thing, using too much of credit card and this all, then they will be in very drastic situation of they will feel like, okay, how I can pay the EMIs and this all. So this also we have one rule, basic rule, that's 40% of EMI rule. So this is nothing but suppose your monthly salary is 1 lakh, 40% is maximum EMI you should go is 40%, means 40,000. It should not exceed 40,000 of your total income. This will, so that's why if you are maintaining this, you will not be in a drastic situation where you will feel that, okay, now what I need to be, okay, now what I should do. So this is also one of the very important thing. Everyone should think about this. It is very important. 50-30-20 rule. So budgeting we should do out allocation of finances to different segment. So it is nothing but suppose 50% ka you have to derive like in 50% what are our basic needs. Okay, basic need is grocery, housing, utility, healthcare, transportation. So 50% of your income should go into this thing. Then 30% of your income is like then comes the needs, then wants. Wants is nothing but that is a daily daycare expenses. It is like shopping, dining out, hobbies, this all. You should expense 20% into this kind of thing. Then 30% should be into savings, like insurance, equity, mutual fund, debt, whatever fixed deposit will be there. That your income should go into 30% into your savings thing. This is also very important. Human life value might be many of you might be knowing about also. So financial planning, human life value is very important thing. So in order to calculate your human life values, what we have to do, we have to suppose my age is 35, my annual income is 10 lakh. I want to I am looking that I will retire at 50, right? I will retire, I will not go 60, I want to retire at 50. So another 15 years is remaining, right? 50 minus 35, 15 years is remaining for my retirement. So right now, suppose 10,000, like 10 lakh, we should like for 1 year, like because his earning is 10 lakh. Okay. So minimum requirement for next 15 years will be 1.1 because he's going to earn 1.5 crore minimum for next 15 years. So his human life value as of his current salary it's 1.5 crore. Suppose anything unsudden event happen, the family should not have to forego their dreams, goals, and they will be in the very drastic situation. Like suppose, I will give you one example. Suppose I am the earning member of my family, only the bread earner of my family. I'm earning, suppose I'm earning 10 lakh per year. My age is 30. I'm looking my retirement at 50 years. 20 years minimum is there. So 2 crore I'm going to earn it. And in that, suppose I'm earning 10 lakh, on that only we are deciding our goals, right? Goals. So my goal was like, I have taken one house of 1 crore. I'm on loan, and I have dreamed that my daughter or son will go to abroad for study. I have to save something for them. Suppose you are saving also something, but for abroad it is like the cost will be very high. Suppose after 2 or 3 years, anything uncertain happened, anything goes wrong, what will happen? Bank people will not go leave your EMIs. They will come and ask for EMIs. You have taken loan. Suppose suppose I have saved also some money, like suppose 5-10 lakh rupees. After 10 lakh also, if I give, basic expenses will goes off because I was the only bread earner of my family, right? So we should plan in priorly only that whatever I'm going to earn, whatever my human life value is there, that much kind of coverage should be there for my family. Because what happened, emotional loss cannot be recovered, but at least financial loss can be recovered by going to term insurance. And at least, because insurance might be sir, you are asking, telling about insurance, but that is very important. Health come first, wealth come last. First we have to preserve like term insurance and health insurance. Everybody should focus on this one. You calculate your human life value, and that much, if you have, suppose you have income, anything income, you should primarily take term insurance and preserve your family goals. Because if you are there or not there, at least your family should not be hampered. Your goals, whatever you have dreamed of, that will not be hampered. Okay, so that is this is the classification of needs, like short-term goal, long-term goal. Short-term goal, what will be the buying new car, household assets, going on vacation, gifting some upgrading lifestyle. Long-term goal, more than 5 years, like what is like buying a house, kids higher education, kids marriage, responsibility of dependent parents, retirement planning. These are all the long-term goals. According to that, we should do this life goals. So allocation towards 5 fundamental pillars of financial planning is that life protection, whatever income you are doing it, 2% you should allocate that into life protection, income protection 10%, health protection 3%, child education 10%, retirement planning 5%. Means 30% whatever savings is there, na, you should allocate like this way. Very important, life and health. So I will just stop the share. Navneet, you just share the screen, last slide. So we, Motilal Oswal, we are into broking, as well as we have one-stop solution for all your financial needs. So we are doing mutual fund, we are doing PMS. PMS is nothing but higher ticket size product, like 50 lakh product. We are doing all the NCDs, we are doing currency, we are doing IPO, we are doing commodities, we are doing equity broking, we are doing private equity, we are having home loans, we are having insurance, we are having bonds. So this is nothing but which is one-stop solution provided for all your financial needs. So for anything, like someone was asking what are the funds we can look upon. So whoever have organized this session, na, please reach out to him. They will definitely guide you, and they will definitely guide you, and we will also help you on that investment part, latter part. The session was particularly to make you understand about the market part and why you should look upon investment into equity market and other investment avenues available for Motilal Oswal. Go to next slide. So thank you so much, team, for giving this opportunity to speak in front of all you. So one quote, I just want to end with one quote, like, a strong economy is the source of the national strength. So we are going with very good pace, and obviously supporting by support of the retail investor, DIS investor, we are going to perform very good. So next slide.
That's it, Satyam.
Yeah, now ready for Q&A. Next slide, you just do it.
Uh-huh.
Yeah. So now we are ready for any Q&A.
Dear participants, you can just post your question so that sir would be answering. Dear participants, the forum is open for Q&A.
One question was there from Funny Kumar that rate cut in US, how does that impact India? Funny, actually, US market determines Indian market. We are developing economy, they're already developed economy. Whatever things happen there, that impacts market actually. Okay. So because they are also running with inflation and this all. So the inflation now, if you see, the inflation rate is in control. The inflation is in control. So they have started reducing the rates. Same thing we are seeing in India. The inflation now it is in almost control. We are seeing there is decline in inflation rate. So obviously that will follow the same. Indian market will follow the same thing, and that is good for market actually. What will happen if interest rate high is na? What I will tell you that why that is good for equity market. And this, suppose interest rate comes down, what happen? Interest rate goes high, then the rate of interest in fixed income product like bonds, FDs, this also goes high. So in that inflation situation, in like dicey situation, what customer will think? Okay, I should preserve my money. They will think, are I'm getting fixed income, I'm getting 7-8%. So they will put money into fixed income product. As repo rate will go down, the interest rate will also fall down for this investment, all the fixed income product. Then that type of situation, if market is doing good, what the investor will think, okay, market is doing good, I will pump out this because anyway I'm not getting very good return in FDs and this bond, I will put this money into equity market. That is good for market. So that is your one of the answer. So that also determines our Indian equity market if US market is cutting the rates. And coming to MOM percentage and YOY is month-on-month percentage and year-on-year percentage. MOM percentage and YOY wise, MOM means month-on-month, YOY means year-on-year. Hope I have answered your question. Navneet, if you want to anything add, you can add it.
I guess I'll tell you there is a fact actually. Recently, I read a report. So of Morgan Stanley's report, wherein even they have said the next 10 decades, the next decade, which is going to be is of India. So actually, if you see, this is the right time to invest in our market. So there is no I'll be thinking to invest tomorrow or today. There is no such time. So if you ask me when is the right time, so I'll tell you this is the right time to invest. So go ahead. That's it, I guess, Satyam. Hello. Hello.
Yes, sir.
Any more question, participant? Please do ask. Please don't hesitate. It is good that if it is silly question also not an issue, please ask.
Dear participants, before winding up, if there are any questions, please post. Okay. Sir, I think we can wind up the session. There are no more questions.
Just a second. I'll be sharing the feedback link in the chat box. So participants kindly fill. So we'll be sharing the e-certificates.
So Satyam sir and Navneet sir, it was a great session indeed, because it was not only helpful for participants, it was not into one age category. It was to youngsters, it was to seniors. So it was a brief explanation what I would suggest, still more and more sessions would actually help us to understand in brief about what you had said today. So going forward, so a very big thank you to you both for making sure that this is just like not a normal session. It's more into more advanced and actually a thing of finance what needs to be learned by everyone. So now I take this opportunity to thank both the guest speakers for the day, one who had given us a streamline about finance. Now I call upon Nayana, faculty member of Akash Global College of Management and Science, to deliver the vote of thanks. Nayana ma'am. Nayana ma'am. Okay. Learning is never-ending process, as we always know. Yeah, it is a great step of one another learning in this 136th learning session. So we thank the college team members and as well as the team management. So for making sure that they are collaborating with Disciples India. And we, Disciples India Learning Forum, we are thankful to both the guest speakers for the day. So who made sure that finance is just not a part of what we actually see it. So it is completely all about the kind of an investment and the kind of learning what we wanted to go in the future. So once again, we thank all the participants for making sure that your attentive learning is also once again a very important. So we would like to suggest to ask more and more questions and to take this kind of platform in a very useful way. So dear participants, once again, thanking you all, and dear speakers, thanking you so much for making sure that this happened only because of you. And we have shared a feedback form. So kindly make sure to fill the feedback form and to get a e-certificate. So further, if there are any participants who is interested to get connected with these kind of forums to be a resource person or to just collaborate with our team, so there are contact numbers which you can where you can contact us, and there is an email which is also being given. So you can send us a short email so stating what has to be done and what are the kind of topics you are interested with. So thanking
I
you
just
once
want
again.
to add one line more.
Yes.
Like
Please,
someone was
sir.
asking about the funds thing. So
Please, sir.
you just connect with DIL Forum, Disciples India Forum, and definitely we will discuss to you in detail individually about the product side. I just had given overview. So there will be a like apart from us, me and Noni, there will be a full team like who will guide you if you are joining with Disciples India Forum and this all. So thank you, team. Thank you so much. It was pleasure to have a discussion regarding the market and the finance product which we can look upon for investment part. So it was pleasure to have you have me today here. So thank you so much, team. Yeah.
Thanks a lot. Thanks a lot, sir. We will get connected to you.
Okay, thank you.
Always.
Thanks a lot, sir, Disciple
Thanks,
India,
thank
for
you so
giving
much,
us
sir.
this opportunity.
Yes,
Thank you.
sir. Thank you.
So hope everyone has filled the form.